Is Robinhood gearing up for a breakout, a breakdown, or a sideways trend? Today, we will break down the charts across weekly, daily, and 4-hour timeframes, and we will also look at the option chain to see what traders are betting on. Welcome back to Fintech Spy, where we dive deep into fintech charts and market trends. If you are new here, hit that subscribe button for more technical breakdowns. Let us hop right into Hood. On the weekly view, Robinhood has been trending down for the past 3 weeks, giving us a clean look at this current pullback. We already filled the gap created going into September 8th, when price broke above 104 and squeezed to 109. Anytime a breakout gap gets filled this quickly, it usually means short-term traders took profits and late buyers are getting shaken out. We also closed just above that major Fibonacci level at 106.12, which is at least a comforting sign for the bulls. As long as we keep closing above that fib level, this looks more like a controlled retest than a full trend reversal. Both the MACD and RSI still point toward possible retracement, so we cannot rule out a deeper dip. But with the RSI oversold on the weekly, this could just as easily mark the end of the pullback and set up the next leg higher if buyers step back in. So from a higher time frame, this is the classic fork in the road. Either we lose that 106.12 area and unwind lower, or we hold it and use it as a launch pad for the next move. Sliding over to the daily view, Friday broke below the key Fibonacci level, but buyers stepped in immediately and forced a close back above it. That same surge in demand also filled the gap that opened ahead of September 8th, which is often where short-term momentum traders get shaken out. For me, this zone is the battleground. If buyers keep defending that fib area on daily closes, it strengthens the case that this is just a pullback inside a larger move. If we start closing back below that level, then it looks less like a healthy retest and more like a breakdown that needs to work off even more excess. Heading into this week, I want to see whether volume expands on green days or red days. That will tell us who is really in control here. And with the RSI oversold and that doji candle hinting at a reversal, we are set up for a potential snapback if the bulls decide to show up. On the 4-hour chart, we are already seeing a lot of buyers step in to defend that major Fibonacci level. Every time price dips into that zone, buyers are showing up quickly, which tells me this area is becoming an important short-term line in the sand. Intraday traders are clearly watching it, both for quick bounce trades and for signs that the sell-off might finally be exhausting. Let us hope the early Friday morning low at 101.89 does not get retested. If we can keep putting in higher lows above that level, it strengthens the argument that a bottom is forming and that the weekly and daily charts may soon start to turn. On the flip side, if we lose that 101.89 low decisively, it opens the door to another leg down and forces us to look for the next support zone below. Looking at the November 28th options chain, open interest is almost evenly split on direction, which tells us traders are debating whether this pullback is a buyable dip or the start of something bigger. On the downside, bears want to drag the price toward the 105 or even the $100 strikes. Those are the levels where put open interest really starts to stack up. On the upside, bulls are hoping we hover around 110 as a base or even climb toward 114 to flip the trend and squeeze some of that bearish positioning. When I see this kind of clustering at a handful of strikes, it usually means we should expect price to be attracted to those magnets as we get closer to expiration. Based on that open interest skew, it still feels like the bears may push for more downside this week. But if price starts to hold above 110, you could see a fast repricing as upside calls come into play. If Robinhood holders want to stop the bleeding, buyers have to step in hard on Monday and again on Tuesday to reverse this pattern. That kind of pressure should shake bears out of their short positions and ease the pain we have felt over the last few weeks. Putting all the pieces together, Robinhood is at an important decision point rather than in full breakdown mode. We have key support levels holding on the higher time frames, oversold signals starting to flash, and signs that buyers are at least willing to show up when price reaches those zones. If Robinhood holders want to turn this into a constructive reset, buyers simply need to keep defending those levels and gradually push price back above nearby resistance over the next few sessions. A steady series of higher lows and stronger closes, especially on rising volume, would lean this story toward a bullish reversal instead of a deeper slide. For now, my outlook is cautiously optimistic. The risk is still there, but the reward looks more interesting if these supports continue to do their job. If you agree, disagree, or want another ticker in the spotlight, drop a comment and we will spy on it next.